What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. More specifically, we're going to be talking about the cycle length for this bull cycle pertaining to Bitcoin. We're going to try and figure out when the cycle will end, how long it can run for, all these things and more. So all of the analysis will be very long-term stuff. I realize that I've made videos like this in the past. So I'll be going over some very similar things. Perhaps there'll be some new things that come up in this video too. I don't know. We're just going to kind of go for it here. But measuring, using time analysis across a couple different metrics to assume when we could see the all-time high come into effect, at least guessing around when we could see that. So if that sounds good to you, buckle up, stay tuned. Let's get into this. So Bitcoin right now is sitting at about $63,135. I should note that for me, it is Monday still, but on the charts, we're about 3 hours and 30 minutes. Is that right? No, 2 hours and 30 minutes into the new day. It is Tuesday on the charts. So anyways, looking at this for what it is, the first thing that I want to do to kind of gauge how far out into this cycle we have to go until we see our all-time high, the first thing that I want to do is measure between highs throughout Bitcoin's history. So the very first high that we had, the very first discernible high, which I think this is obviously it, right? This is the all-time history index, BTC USD index, Bitcoin all-time history right here. That's what we're using. I could measure from here to the high, and that's 20 months that we've got, but I don't know if that's fair. I think from this high to the next high is probably a more accurate estimation. And this month is the higher price. So 29 months. It took 29 months between highs here, okay? From this high to the 2017 cycle, 49 months is how long it took. And then we are just going between highs, right? When we could see the all-time high. And that is the all-time high of the last cycle was the second peak there at 47 months. So 29 months, 49 months, 47 months. Two of these are closer, like very, very close to each other. This one's kind of an outlier, something to keep in mind. From the all-time high to where we are right now, it has been 33 months. So already past the 29-month window that we had established here. And in fact, if we did have our high already, it would have been this month here back in March, right? Because that was the actual, yeah, it was March. So that'd be 28 months. If that was the high in March of this cycle, this would be the smallest gap that we've seen so far in Bitcoin's history between cycle highs. So I think that adds to the idea that we have not seen the all-time high for crypto, or at least for Bitcoin, being set this cycle yet. We've got more to go, is all I'm trying to say. So we're at 33 months now. 47 months was the next window, so let's just put a line right there. 47 months, right there, boom. 49 months would be right here in December. So that would put us right between October and December of this year, right? October is the first line, December is the second line. So somewhere in that range. Sorry, not this year. 2025, next year. A whole year and a couple months to 4 months out from now is what this metric alone would get us, okay? Now, I want to take that same kind of idea, but go from the lows. Right, and actually I want to leave those white lines on there, so we'll just take away all these. I want to go from the low to the high, how long it took us to go up. And I don't know if this is fair, taking from this low, measuring to this high. This was the first cycle. I don't know if that's fair, but 18 months, sure, whatever. From a low point here, the low of the cycle, to the high, that was 24 months. From the low point here, and I think we'll use this second low. That was the technical lower low. If we really go in, it was a double bottom, but this one was the technical lower low. So we'll do that. That was 28 months, 24 months, 28 months. And then here, the low of the cycle as well to the high was 35 months. Okay. So 24 months, 28 months, 35 months. One could conclude that the cycles are getting larger in an aspect of time, right? That they're taking more time to form their highs based on this, and based on the last one that we saw as well. So from a low point here to where we are, we're at 21 months in. If we were to go to 24 months, that potentially put us our all-time high back here that we had took 24 months. That could put us at an all-time high in November of this year for the end of the cycle, which doesn't sound right to me, but that's the earliest window that we've gotten so far. 28 months would be March of 2025. I think that one is worth noting because we'll see that come up a bunch of times, March specifically. And then 35 months puts us right in October of 2025. So it could be October again, based off this metric alone, which is measuring, again, from the cycle low to the cycle high each time. We don't have the cycle high yet, so we're just guessing. But I do want to mention that there is a little bit of some obscurity, or maybe not. There's a lack of accuracy in this metric, in my opinion, because here you can see, okay, from this low, this was clearly, the next month was clearly the beginning of the bull cycle, right? That's a nice 59% move up for Bitcoin in a month. I mean, it moved sideways for a little bit afterwards, but that's a good beginning right there, right? And it definitely topped off here, end of the bull market, no doubt about it. Here was the low, but we were sideways. We were only 2.2%, right? We had a very neutral month the next month. One could argue that we didn't start the bull market until this month here, and in which case that'd be like closer to 26 months. You know, something like that. Where here we started the bull market immediately after, right? Immediately after this low right here. This, if we did the same from the low to the high, it would give us 28 months, where really the bull market, if we're measuring the bull market itself, which I think is what we're trying to do by getting through these measurements, I think it'd be more appropriate to measure from here, in which case that'd be about 26 months. Same kind of thing over here. This was the low, sure, but the bull market arguably probably didn't start until this month when we had the breakout move, right? We were just moving sideways, being neutral, and it didn't end back here, right? The bull market probably ended with this move here, so that'd be more like 24 months. If we take a look at it like this, we can see that we've got a more kind of concise average of bull market time frame behavior, right? So 24 months, 26 months, 24 months, those are all very close together versus what we had before, which was what, 24, 28, and 35. A little bit different. It's kind of interesting to look at it in this light. It's hard to say, though, because I have conflicting thoughts about last cycle. I feel like this was the end of the bull market. Absolutely it was. But I feel like the second part, we should have continued higher. I believe we were robbed. I believe there are a lot of things in the world that were going on that prevented Bitcoin from going higher, specifically the DXY gaining dominance and grounds in its chart. I think that held the Bitcoin chart back a little bit, but just something worth mentioning. Nonetheless, though, without that in the frame of thought, you can see 24 months, 26 months, 24 months, pretty close together. And with that, from the beginning of this current bull cycle to where we are now, we're 19 months in. 24 months would put us in January of this year, 2025. And then potentially March, again, 26 months, March coming up in that same kind of aspect. So with this kind of look in mind, based off of just like the rough, like prime of the bull market each time, right? Not including the months of being stagnant, moving sideways, not the crab market, not the crab market here, not going just from the low to the high, but the actual start of the bull market. You can see that this does give us a little bit of a smaller time frame for the bull cycle to continue. And this still would put us in next year, in 2025, but that would give us a window between January to March. So that is something to mention. I think this window between March and October is probably going to be the most accurate that we've got so far. But again, something worth noting, it could end earlier than that. 2025 itself is kind of the window of opportunity for the Bitcoin bull cycle to end. And it genuinely could be Q1. And that might scare some people whenever you hear that. You might hear Q1, right? It's almost September now, so that's we have all of September of 2024, October, November, December, and then in January, on that fifth month, 5 months from now, essentially, we're in Q1 of 2025. The Bitcoin bull market has the potential to end, based off of what we've seen historically speaking, to end in January, and that can be scary. That can definitely be scary, especially for people who feel like they got in late. Maybe they bought the highs. You don't know how much ground you're going to be able to gain in that amount of time. Nonetheless, I do believe we're going to gain ground. The end of the cycles seem to be the strongest, but the thought of it ending in January is a bit early, in my opinion. But even with that in mind, I always love doing this little comparison to the last stage of our last cycle, and even the cycle before it only gets more strong. But the last cycle we had was the weakest cycle we've ever had, undeniably, right? So measuring from the growth phase of this last cycle, like this, the finale, if you will, not the actual low to the actual high, not that, but the actual finale, right? Which I feel like this line does a pretty good job of encompassing that, right? From a high point there to a low point. It's not the most perfectly drawn line, but it's pretty close, pretty damn close. This not only encapsulates the length from a low to a high, it also encapsulates the time frame that it took. If we put this line right at the current price, and not even at the current price, but at like the low of this month's wick, like right there, right? That would actually take us by March of 2025. Technically, this would actually be by February, right? In this same amount of time that we saw last cycle for the finale. That would take us up to about a $300,000 price, and that's with this line being measured right at the low of this month here, right? So that'd take us right to around 300,000. January, if the cycle were to end in January, guys, this is what this is telling us, okay? And this is why this is a big deal, and I think it's worth mentioning. I don't personally think the cycle is going to end in January. I don't personally expect that we're going to be worth multiple hundreds of thousands of dollars in Q1 of 2025. But what this is telling us is that if we see some insane growth from here on out through the end of the year into the beginning of next year, if we literally see Bitcoin cross the threshold of $200,000, getting up to $300,000 or higher, and it's January of 2025 or March, we're in that window, and price is looking like that, then we know that we're likely at the end of the cycle. We're likely not going to go on to October, because if we're growing at that pace, and we're still going to grow until October, that could imply that Bitcoin's worth like over $1 million by the end of this, and that's just probably that's very likely not going to happen. And I'll go over why I don't think that's going to happen too. Short and sweet, from a high to a low, $1 million, that put us above the 2618, the golden extension times 2, right? The 2618. We've never seen a Bitcoin bull market go from its high to low. We've never seen that extended move past the 2272. We've never seen that. And I actually do think this is where Bitcoin's going to go by the end of the cycle. But something, again, just getting back to this idea, if we do see a shorter time frame, if it is sometime in Q1 of next year of 2025, if it is within the next like 5 to 8 months, 5 to 9 months, however big that window would be, that we have left of a bull cycle, it will be obvious. It will be obvious. We will be very hot. This is the finale, right? This is how bull cycles end, right? If we look at let's look at the last 5 to 8 months of any bull cycle, right? Here's the high, and I'm not taking the all-time high. I'm taking the end of the cycle, right? It's very obvious this was the end of the cycle, right? This was not the end of the cycle. The cycle was over before then. We started a crab market, just like this was the end of the bear market, this low right here, but we didn't start the bull market until months later. Just like this was the end of the bear market here, but it wasn't the beginning of the bull market. That was over here, right? This was just like a crab market. So same kind of thing here. If we're going based on time, 5 months back, 1, 2, 3, 4, 5. You know what? Actually, perhaps I do want to do this in percentages. Let's do this in percentages. So 1, 2, 3, 4, 5, 6, 7, 8. Well, the low within that 8-month window is here to the high. We moved up that much. Okay, that much in an 8-month window before the high. It only gets bigger as we go back, right? Here's the cycle before that. So 1, 2, 3, 4, 5, 6, 7, 8. And I don't even know, is that appropriate that I'm saying 8? Should I be doing 7? Because I'm counting from here. I'm not counting that one. Whatever. We'll count it from here. We'll just count. We'll count it one less. We'll count it one less. Be more conservative, I guess. Right. So that's the last 2 cycles. I can assure you that the cycle afterwards or prior to that is even larger. If I could just talk properly. This is the 8th month from the high, right? So 2000. It's only getting smaller, and we could conclude by this metric alone that perhaps this cycle's finish will be smaller than the last cycle's finish. But I have a conniption to that. I have a little bit of a disbelief as to why. I don't think this cycle will be smaller in its finale phase than the last cycle. I don't think we're going to continue this trend of getting a smaller. I actually think it's going to be comparable, if not larger, than last cycle's finale from an overall percentage standpoint. Okay. But just comparing this, I don't know, 2,300 down to 1,300 down to 500, you know, you went from basically being cut in half to being cut into like a third almost. That's a pretty big deficit from the last cycle, just showing again that lack of strength and vitality that we see like in Bitcoin at the end of each cycle. Stumbling on my words here. All right, let's see. I've got all those measured up. What I want to do now is probably, actually, I'll probably just delete those, just to show though again how much it can grow in a very short amount of time. That was kind of the main reason. What I want to do now is compare the DXY and drink some water. If we're looking at the DXY, and for those of you that don't know what the DXY is, it's the US dollar index. It's based on like seven or nine or something like that, different currencies, like the Swiss franc, the euro, the Great British pound, other things, Japanese yuan, Japanese yen, not yuan, Chinese yuan, Japanese yen. Let's see. DXY, what is the DXY based off of? All these, right? It's a basket of currencies. So, Swedish krona, that's what the DXY is, right? It's a measurement of the dollar's strength essentially based off of those currencies there, right? So if it's going up, that means it's gaining value versus all these currencies, which are very predominant currencies in the world. This chart is a very standard chart when measuring kind of the strength of the dollar in itself, okay? I like to reference this chart often whenever doing videos just like this for Bitcoin. We go to Bitcoin, new price scale right here. We're going to compare, right? This is Bitcoin. Throw it on there. It only goes back this far because this is the history that we have for Bitcoin, right? It doesn't go back further than that. The dollar existed before Bitcoin did. That's why it has more history, obviously. So looking at this here, and actually I want to blow it up a little bit. Looking at this here, we can see that Bitcoin, and maybe I should, yeah, we can pull it in a little bit more. That's fine. Bitcoin goes through phases where it goes up, and then it goes down, right? It's boring, and then it goes through its up phase, it goes through its up phase. We can see these phases, these bull cycles. They're noticeable, they're distinguishable in this line chart, right? It all just looks like it's going up, obviously, but there are phases of expansion. Right, phases of non-expansion, phases of expansion. Same thing in the US dollar, in the DXY. Right, there are phases of expansion, and there are phases of consolidation. And then there's phases of expansion, and then consolidation. Phases of expansion, and then consolidation. It's very ideal for Bitcoin, and for any asset really, if it's priced versus the dollar. If it wants to gain value versus the dollar, it's very ideal for these expansive phases to take place when the dollar itself is not in an expansive phase. And you can see that actually happens generally with Bitcoin, right? Its first bull cycle right here was actually coinciding with a downtrend in the DXY, right? It had a very explosive first cycle, and then came down a little bit. It corrected as the dollar was done correcting, and it moved up. It wasn't in an expansion phase, right? It wasn't in one of these phases. It's definitely distinguishable, right? The difference in the chart here, if you can't see what I'm talking about, right? This is absolutely different than this is, right? Absolutely it is. In just strength and overall like quickness of the move, right? It literally is expanding upwards to another level versus consolidating in the same level over time. But when we were done moving down in the DXY on the bar or the candlestick chart here, the line chart here at the low of the candlestick chart, the line chart Bitcoin's price actually moved down as the DXY moved up. Bitcoin's first bear cycle. It began to have its next bull cycle and continued to grow, while the dollar, whether it was moving up or down is irrelevant, was still consolidating, right? And then its bear cycle happened, Bitcoin's bear cycle happened in the midst of this consolidation phase, but really set underway, and we got to the end of it, really went under fire, crashing as the dollar expanded. Okay, so we see this happen once with Bitcoin. We'll see it happen again with Bitcoin. There are these phases where when the dollar is moving up, whenever it's expanding, we see Bitcoin enter bear markets and go through hardship. Okay. But this bull cycle here and this bull cycle here, both of these, there was no expansion phase for the dollar, right? Here's the next expansion phase, and that happened during a bear cycle, okay? And we actually had a very long lull, right? That crab market that happened there, arguably because of that, because the dollar was gaining so much ground. It's hard for Bitcoin to gain value versus the dollar when the dollar is gaining value, whenever the dollar is gaining strength itself. So go to the next cycle here. You can see that Bitcoin's got its bull cycle, right? Here's the beginning from down here at this lull, at this low point. We started moving up here. The dollar was not in an expansive phase. It was actually in a consolidation phase, right? All the way up until here, up until about April of 2021, right? April, May, somewhere around that time, right? The first peak of the last cycle high. And I did skip through this one, but that's because this bull cycle clearly started after the expansion was over and you were in a consolidation phase, right? So this cycle, the 2017 cycle, had its strength. Same with this one before. They didn't have the expansion of the DXY in the way. Whereas last cycle, this expansion in the DXY actually happened right here around the first peak for Bitcoin, right? That's when it began. And when Bitcoin should have had its most phenomenal, most dominant, spectacular finale of the cycle, whenever it should have grown the most, was actually whenever the dollar, the DXY, was expanding as well. So I think this is what inhibited Bitcoin's growth. We've never seen that at the end of a bull cycle where, or even in a bull cycle, where Bitcoin's trying to move up and the dollar is expanding as well. We've seen it where in a bull cycle, the dollar's moving up, the DXY is gaining value, and Bitcoin's moving up. We've seen that, but this is different than this move is, right? It's different than this move. You can see the difference, right? They don't move completely inverse of each other all the time, but we can even actually compare that if we'd like to. We can do a correlation coefficient on there, which correlation coefficient, as you get closer to 1, that means they're more directly correlated. As you get closer to -1, they're more indirectly correlated. And of course, you're going to see more inverse correlation than positive correlation between these two charts. But you can see here, they're not always opposites. Sometimes they're actually correlated, right? And right now we're even in a phase of correlation. But it does seem that these phases kind of go in waves, right? Like it looks like nice little waves, and it up until the end there. It seems like we're at the end of this one, right? We might start going into a phase of decorrelation with the dollar, which would imply that if the dollar is moving down, which it might be, then Bitcoin would move up. If they're losing correlation, that's what would happen, right? If the dollar is moving up in value, Bitcoin would move down in value. That's what this loss in correlation would imply. And I think we're about to start seeing that. And it makes sense too, because the dollar actually, the DXY does look like it wants to go down. Like if we're looking at the chart in itself, it's got a very flat bottom here. You look like you're crashing down. I mean, with this in mind, just from a low point to a high point here, we'd be talking about, you're at 100.89 essentially. And that's not dollars, that's just like the value associated with the index. You might be moving down to like 97.5, 95, which that's a very big deal, right? To put that in other like respects other than just like the value of it, right? 100 going down to 97.5 doesn't seem like that big of a deal, right? But for the DXY, it really is a big deal. This is a humongous deal. Those will be levels that we haven't seen since more than 2 years ago, like nearly 2.5 years ago, since 2022, early 2022, the levels that we might be descending to, right? So it's a very big deal. Levels of strength on the index, right? The lowest levels of strength we've seen in over 2 years' time. So the dollar's definitely losing value. Would be good, and almost always is good for risk on assets like Bitcoin to move up. So what's nice about this, the reason why I've painstakingly gone over this for I don't know how many minutes now, just this one specific part, which I really didn't mean for it to go on, but I just felt like going for it, so we're doing it. The reason why this is such a big deal is because this tells us that we will likely not have this expansion phase at the end of the bull cycle like we did last time. We're not going to be going through that. We are actually just in the beginning of this consolidation phase, right? We're just moving through it, and we're actually about to move down, which is probably going to be very good for Bitcoin and for other risk on assets. We can see, and I'm going to take this away for Bitcoin real quick just to end this little part here, because I've done this a handful of times, but you can see here at the end of this expansion right here from the low right there, basically like we can just measure from here, right, to the time that you started consolidating until the next beginning of the next expansion here. That was about 68 months. 68, that's what that says. 68 months right there. Monthly time frame, 68 bars, 68 months. Here was the end of your expansion phase here. Not the high, obviously, but end of the expansion phase nonetheless. Started to consolidate. You didn't really start to expand out again until about here, which was 75 months. Very large amounts of time, right? From the end of the last expansion phase, which is very discernible right there, to where we are now, it's only been 23 months. So just in comparison to these other consolidation phases, I think it's very safe to say that the rest of this bull market for Bitcoin is not going to be inhibited by an expansion phase on the DXY. We won't have this in our way, and we did last cycle, which gives me hope, all back to this, that Bitcoin will see a larger finale than it did last cycle. It'll be larger both in a percentage time frame and probably in a time frame aspect in itself. I mean, this was just 1, 2, 3, 4, 5, 6, 7 months. Not even quite a full 7 months of upside, right? And it might not be 7 months back to back. It might be that Bitcoin's moving up, but if it is 7 months back to back that it's going to top off, it's going to be larger. I theorize that it will be larger than 559%, okay? And if it is, based off of this, right, from the relative low that we have here, and I'm actually going to move this because this line was a rough estimate where this is actually a little bit more accurate. If it is larger than the last cycle, this would put us at about $330,000. Then what I'm calling for at a minimum by the end of this cycle for Bitcoin would be something that is greater than $330,000. And when will that happen is the main question, the main focus of this video. All that to circle back to this stuff is what we're trying to figure out. We're not going to know. I personally don't think that it happens in January to March. I personally do believe that it's going to happen later in 2025. This market has been more structured, I think, and more tame than even the previous cycle, right? We had this very long drought here, but this was still very just sporadic and like strong behavior. It wasn't very structured like we've got now, where we've got 6 months of moving sideways here, 7 months of moving sideways here, right? Here we were just moving straight up, consolidated for a long time, moved straight up before, right? Unsustainable rates of growth. Here we're checking back and consolidating along the way. I don't know. It seems a little bit more sustainable. It might take more time to get to these levels is what I'm getting at than it did right here, right? I don't think that we're at the end of the cycle right now. But if we were, again, if January to March were to be the end, I think we'd know it because we'd be close to 300,000. If it's January or March, guys, if we're in that window and we're at like $300,000 for Bitcoin, my genuine target, which is at like 460 to 500 and something $1,000, like somewhere between the 2272 and $500,000. That's my genuine target by the end of the cycle. That would be off the table. I would take that off the table, no doubt about it, if we were at these prices above 300,000, even above like $250,000 by January of this next year, right? Of like in 5 months from now. If that was the case, I'd start to think that, okay, we might, this could be the blow off top that we're looking for. Perhaps we do get a lull and then we go for a second attempt and it is a higher high, but only slightly. And instead of topping off at 259,000, we top off at 307,000, you know, something like that. But at that point, who cares? You know, it'll be the end of the bull market anyways. I just think it'd be a lot more obvious, right? So that's kind of what is nice about looking at it in this aspect, is you don't need to know when the end of the cycle is going to be if you know what it's going to look like, right? And I very strongly do believe that it's going to look something like this. And the reason why is because if we go back, we delete everything here and we just start fresh, go back to the first cycle again, very first high to the very first low that we had. The next cycle after that went all the way up to the 2272 and actually just above it, right to the 2272, just above it right there. That's where it topped off, right? If you sold the 2272, you would have killed it. If you bought anywhere here and you sold up there, like right at the 2272, literally, even though you would have missed it by $240 on a $1,085 price, that's like roughly 20%, a little bit less than 20%, you would have killed it, right? Selling right there, that's great. Came down, found support on your 1618, continued to move higher afterwards. Beautiful, right? That was your first cycle high to low. We take our next cycle's high to the low, cycle low. And you could see that yet again, we went all the way up to our 2272, just above it yet again. Still, if you sold at the 2272, this is at 15,500. The high, the all-time high that cycle was 19,800. It's a pretty big difference, but still, if you sold 15,500, you're doing pretty damn well for yourself. And again, this could be like your warning, like, hey, you've hit this level, it's probably time to get out. You'll probably go a little bit higher, but it's probably time to get out. 2272 showing respect yet again on the 1618 area, tipped it on that COVID crash right there, but still held support, even actually held resistance underneath this area for a little bit, but right there around the 1618 again. So both cycles before. Those are the two cycles that did not have the DXY interfering. Our last cycle did have the DXY interfering. From a high point to a low point, we didn't hit the 2272. This is where I think we were supposed to go for the end of the cycle. I think we were supposed to have a ferocious end. It was supposed to be a blow off top like it normally is, right? Just how perfect would that have looked? But we had COVID, we had the Ukraine-Russia conflict, we had quantitative tightening going on, high rates of inflation, all kinds of just things going, and not just in America, high rates of inflation across the world, which to me still doesn't make sense. How can you have, you would think that high rates of inflation would bump the price up of risk on assets, but that's not how it works, right? Because this stuff's determined more by our psychology. We think interest rates are going up. We think inflation's going up. It's bad for like the dollar. It's bad for the economy. It's bad for the world. So we get scared and we get off of our risk horses, right? We take a step back and we sell our risky assets like Bitcoin and other things, right? Our investments. Even though, like, theoretically, mathematically, inflation would only be better for them as time goes on to make them gain in value. But I digress. What I'm trying to say is we didn't hit the 2272. We had all these things going on, but the main reason for that, I think, is the DXY. That's my personal expectation, because we're going through an expansion phase. At the end of the bull cycle, we were robbed of our 2272. When I think we should have gotten it, we were just robbed of it. We were robbed of the full strength of what this finale should have been. That's just my personal opinion, right? We can kind of go back here and see, I'm not going to do that actually, but if you were, I wonder, hold on, let's just see. From a low point to a high point here, 62,000. From a low point to a high point here, 12,000, right? And right, if you divide that, what's it supposed to be, like 5.3, right? That's Crypto Crew University's 5.3 theory there, which I think has already been proven to be BS, but it worked for a time, but it's actually, I think the multiplier is actually closer to like 5.18 or something. I went through and I did this, but if you're going to do like 5.3, try to be specific, but let's just assume anyway, 62.2 divided by 5.3. What's 62? What was it? 62.2. Come on. Divided by 5.3, is that right? Would be 11, so about 12K, right? And that's about 12K there, right? So if we take 12K and divide it by 5.3, we're just doing rough. I don't really care to be super accurate, but just using it roughly there, 2.26. We go from the low to the high. You can see that we were close. We were actually very close to that, but we didn't quite get there. 2.26 would have actually taken us, if I can get it. It won't let me. I need to make this magnet weaker. Maybe not. For some reason, I thought that number would have been higher, but I guess it's actually like around the price that we're at now. For some reason, I would have thought that it would have been higher. Again, you can replay the video like 5 minutes ago. I was like, I don't know if I want to do that. I was talking about doing this. I didn't know if I wanted to measure that. That didn't add to what I was trying to say. It didn't take away from it, right? Because I mean, it was that basically that 5.3 theory went basically right on point with the end here. But what I was really trying to get by that metric was measuring the difference in the finale's growth by the end of the cycle to kind of match it up with where it should have been, which I guess I don't really care to do. Well, whatever, it's okay. Anyways, back to the main point, guys. I really do believe that we should have gone up to the 2272. We didn't. Hit the 1618 stop there, came back to our 886. Now we're holding above our 1618. It's looking good. It's looking like we do want to continue. I would expect that we find resistance here at this $207,000 area. It is a 2272 area that we have not interacted with yet, and we are still showing significance throughout this cycle at various points on this Fibonacci scale. So 200K I definitely do expect will be a significant point of resistance for us. But if we take the last cycle, the previous cycle's high, to the current cycle low, the most recent bear cycle low, if we take that into consideration and we look at where we are, the minimum targets that we would have based off of what we've seen historically for Bitcoin would be anywhere from the 1618 to the 2272, right? Based on these fibs here, which is at about 173,000 at a minimum to 462,000 at a maximum, right? And each time, besides the last cycle, we did see Bitcoin reach its 2272. It went just above it. What's just above 462,000? 500,000, just above 500,000. You know, that $500,000 mark could be a very psychological level of significance, both as resistance and just as like a self-fulfilling prophecy for the number to hit there. We might even break through it a little bit. It wouldn't surprise me if we went just a little bit through 500K by the end of this cycle, but I do think Bitcoin's going to end the cycle up there. And I do think that it'll probably happen much in this fashion. As crazy and dramatic as that seems, that's just the name of the game with this thing, man. And that would actually put us, based off the way that I have it drawn, almost exactly what I would expect in a time frame for this to look like, right? Like October of next year. Now that doesn't mean that it has to move up straight in a straight line like that, right? I have it drawn like that because that's just what it would look like. But Bitcoin itself, right, it didn't move in a straight line like this last cycle, right? No, it had zigs and zags in between. It had phases where it was moving up faster and phases where it consolidated. If we drew from this low to the high, right, like that, like, oh, that's not the best line, but something like that, right? That cycle did not look like that, right? It didn't look like this line. Right, it was a little slower than that at times, a little faster than that at times. So just because I had it drawn, I'm going to take this away here. Just because I had it drawn like this doesn't mean that, just because I have it drawn like this and it looks impossible, maybe to some people, right, because of how fast and expansive it is, how powerful this is in a very short amount of time, it does not mean that it's impossible from happening, right? Just because it might look like that doesn't mean that it can't happen, because we've actually done moves just like this in the past, right? We've seen moves more or less this exact same strength, even in the weakest of times. We've seen moves like this. So I feel like I'm falling off the rails a little bit here, guys. I got sidetracked with a couple things, and there was something else that I wanted to go over, and I don't know what else to go over. So I'm probably going to end the video there. Monthly RSI is looking good. Okay, yeah, here's another one actually. You know, something else that I mention often in these longer term analysis videos. So if you take a line here on the monthly RSI for Bitcoin, and I have my RSI set to a 10. You can have it at a 14, which is standard, a 12, whatever you want. It's all going to be the same more or less. You'll get something that matches up with this line. They just might be at different readings, but it'll look the same more or less. We can see that we've had every single high in this RSI, which corresponds, not every single high, but the second high actually corresponds with an all-time high, right? Here's your first high in the RSI. Your second high corresponds with the all-time high. First high in the RSI, second high corresponds with the all-time high. First high in the RSI, second high here corresponds with the all-time high. First high here, second high, it was a lot lower, not actually at the line this time for the first time, just showing again the weakness last cycle. Relative Strength Index, that's what this stands for, RSI, Relative Strength Index, weak. Very, very weak. Still overbought, still showing strength, but relative to what Bitcoin's seen throughout its history, that was a weak second peak. That's the only second peak that we've seen so far in this thing's history that did not interact with this trend line. But nonetheless, the second peak was the all-time high of the cycle. Adding more to that idea that we were robbed last cycle, right? Adding more to the idea, and there's the reason why I keep hitting on that so hard is because I don't think our cycle is, I don't think our last cycle was supposed to be 24 months. I think it was supposed to be 31 months, but we only have the 24 months of data because undeniably, you look at the chart, there's no argument to be made. The bull cycle ended here. It absolutely did. I think it should have ended here. And I think it should have ended higher. I think it should have been more discernible, right? It's like you wouldn't call for this to have been the end of the bull market here, But if you didn't get this second leg up, it would have been the end of it. I think we were robbed of our next leg up of our true finale. So with this 24 month, again, going back to the whole 24 months, 26 months, 24 months that we measured, right? 24 months here, 26 months here, and then another 24 months back here, measuring the true ignition of these bull markets, right? Because you actually started at the low on that one. 24, 26, 24, if we take that into consideration, again, from the beginning of this bull market to 24 months, that goes all the way back to January of 2025, 26 months being March. If that's the window we're working with, we don't have anything that deviates from that. But if we assume that this previous cycle was robbed from us, which is what I'm going off of, right, then that does line up a little bit more. That 31 months times further than 26 months or 24 months could be achievable as well. We could see a longer bull cycle than just 24 to 26 months. And if we saw something that was 31 months long, well, that would put us in this, at this rate, would put us in August of next year, the latter half of 2025, which is all that I'm getting at, is that I think this cycle will end in the latter half of 2025. I'm personally expecting October. If I'm wrong in that, then all that means is we're probably not going to go as high, but we will go higher in a shorter amount of time than I'm assuming. So it'll be better for the short term, it'll be worse for the long term, but all in all, Bitcoin's going to do what it wants to do regardless. And the only path, the only way forward that I could see Bitcoin going up to these numbers at 462,000 or higher, this 2272 being achieved and getting back on track with what Bitcoin has done historically speaking. It's only done it twice before, and then one time it didn't, but you know, just what it's done the majority of the time, very technically speaking. Getting back on track of hitting this 2272, the only way I can see that happening is if we continue to do what we've been doing, which is moving up. Oops, that's not it. Moving up and then chilling, and then moving up and then chilling and then moving up, like being structured, right? And that would take a little bit more time. This would actually put us in somewhere in like 2026, but I didn't draw it the proper amount of time. Like as far, I didn't draw in the amount of space that I needed to, but you get the idea that I'm going for, right? If we move up faster, if we see these prices that are upwards probably above 173K by the end of the year or sometime in Q1, we'll know that the end of the cycle's coming. If we are chilling, if we're consolidating, right, if we've had our high and we're marinating on it, right, for a little bit of time, that'll get us set up for our real finale, right, which will be the end of the cycle. I would assume that we are going to run somewhere between 128 to 174, somewhere in this zone for our next run, and then we'll consolidate, and then going into the end of next year, the second half of next year, that's when we will have our finale. And it'll take us up to these levels at 260 to 462 or higher, right? And I'm drawing these areas right now being conservative, but I genuinely do actually believe that we're going to see 462,000 or higher. That's my personal expectation. And if I'm wrong, that's okay, right? We have the time frame, we have key prices mapped out. We'll know what it looks like when we get there, okay? I'm not just saying that anytime we see 260 that means it's going to be the end of the cycle. I'm saying if we're at like $260,000 by January or March of next year, then I would think it's the end of the cycle. If we're at 260,000 and it's June, July of next year, I could very well see that we've got more to go. We have a couple more months left or a few months left to continue to climb upwards to on our path to the 2272 up here at 462K. But I think I've hit that over the head enough times. I don't know what else to go over. We haven't had our first interaction with this line. We've got our high here. This is the first. This is kind of a first of like any kind of bull cycle that we've had before, where we've had our first high in the overbought zone that got out of the overbought zone without touching this area. A case could be made for this area here as well, but I don't know. But I'm not assuming that this high is the first peak. I don't think that it is the first peak, right? I think that we've yet to interact with our first peak, but time will tell. Our first peak, by the way, tends to be 4 months there. Right here to this one was 7 months there. Right here to this one, 4 months there. And then this one here was also 7 months, I believe. So 7 months and 4 months. Already from this peak, I think we're at 5 months here, yeah. So unless this next move by the end of this year is our all-time high, I just don't see this. I don't see this being this part of the RSI being the same as these other highs, right? I think that this next move up really is going to take us. I think this next move up in the RSI is going to be our first peak that interacts with this trend line, and then we can measure 7 months, 4 months, 7 months out when that peak comes in. That'll give us another kind of more accurate depiction as to when we might see the end of this cycle happen. But time will tell. Time will tell. And I got nothing else to say, guys. I feel like I'm just rambling at this point. This video went on way longer than I meant for it to. And yeah, with that, I leave you. Hit that like button. Subscribe if you like the content. You want to see more. I do think Bitcoin has a lot left in the cycle to go. It's going to go like that. It's going to be this time next year before you know it, and you're going to wish you had more time to invest. But while the getting's good, you guys, it's a perfect time to invest. We're consolidating right above our previous all-time highs, right above this cycle's 1618, right? Like right there. This is the liftoff zone. We are at the prime area right now. 63,000, just below 63,000 is going to feel like a dream. You're going to wish that you had that price when we're at 101,000, 125,000, let alone all the other cryptos that are involved as well. But dollar's going down. DXY looks like it's going down. Perfect storm for Bitcoin to go up. Once we break out of this little handle, which really is probably a handle out of this cup and handle pattern here, right? When we break out of this, it's on, guys. It's on. It's going to be phenomenal. And I'm really excited for the end of this year. I think it's going to be great. I really do think that we'll be above 130K by the end of this year. I don't know if we're going to close the year at 130K, but I think we'll have interacted with prices above 130K by the end of this year, if not even more high, like higher than that. But time will tell. I got nothing else to say, so hit that like button. I'll see you on the next one. Take care of yourselves. Bye-bye.